What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Tesla's delivery numbers, which came out earlier today. Tesla stock right now is selling off a little bit. We'll go over the technical analysis here in just a minute. It's down a little bit over 2.6%, trading just a little bit over $240 per share. And I'll go over exactly why it is so important for you as a Tesla shareholder, as a trader, as an investor to hedge your positions so you're not caught in the wrong side of the trade. Even if you are investing for the long term, you can go way out of the money. That's why, selling covered calls is one of the best, in my opinion, one of the best ways to actually generate some cash flow while also holding on to your shares. Now, I know that some people will say that, you risk losing your shares. You can kind of, have to get rid of your shares. You may get that call in the money. Well, that's why you got to structure it in a way that you go with really low deltas, way out of the money calls, that even if Tesla rallies over 50%, 60%, still the calls are going to expire out of the money. And it's not going to happen in that short period of time, which is 30 days or something. So hope you guys enjoyed this video. I'm going to break all of that down. As always, if you enjoy it, find it helpful, make sure that you drop a like, subscribe to the channel. If you're just joining us for the first time, link to our Discord and Patreon is going to be down below. If you want to get access to all the buy and sell alerts, options alerts, trade ideas, everything is going to be included. And of course, including the options alerts, which I'm going to go over my position here. So these are my calls on a Tesla right now. So $210 call, even though it is in the money, I'm up a little bit over 34%, close to $2,300. This right here is a 215 call, which is up close to $300, is 7.3% gain. And this right here is the 265 call, expiring all of them in November, December, and that's up 76%, up a little bit over $3,300. So if you do the math here, 2,300 plus 300, so let's just do this, 2,300 plus 300 plus 3,358, that's over almost $6,000. There's one more call that's up another 73%, up $427. That's a little bit farther out of the money at 325 strike. So all in all, a little bit over $6,500 in profitability, or in other words, by $60, I've been able to lower my cost basis on Tesla, right? That's pretty significant amount of gains here if you consider just looking at the options chain and better understanding, what is possible out there. Now, going over to why Tesla is selling off right now. Tesla reported 435,000 deliveries for the third quarter, and production was 430,000. So it's possible that the Tesla did have a little bit of inventory left over, which they also did deliver over the third quarter 2023. And so here are the numbers. Total deliveries for the third quarter, 435,000. Total production, 430,000. And of course, the consensus was very high. Consensus was way higher than what the delivery numbers came out to be. So Tesla reported deliveries of 466,000 and total production of 479,000 during the same period in 2022. And I don't know if that's actually accurate. What is during the previous quarter? So during the previous quarter, so quarter over quarter, yes, quarter over quarter, we did see a bit of a decline, but year over year, Tesla did see an increase because deliveries were 343,000. So if you do the math, they are up by about 102,000. So 435 divided by 343, we're looking at a 26, almost a 27% increase in volume deliveries year over year. And a sequential decline in volumes was caused by planned downtimes for the factory upgrades, as discussed on most recent earnings call. And our 2023 volume target of around 1.8 million vehicles remains unchanged. That is the key there, because of course 1.8 million is going to be a pretty sizable increase from 1.3 last year. So 1.8 divided by 1.3, we're going to be looking at least a 38-39% increase on a year-over-year basis. This right here is also something that Sawyer Merritt mentioned on Twitter. So Tesla has now delivered 1.32 million cars as of the end of third quarter 2023, which officially surpasses the total of 2022, which was 1.3 million. And Tesla reiterated their 1.8 million target. And of course, that means 476,000 deliveries needed in the fourth quarter for the company. And this right here is how Tesla's progressed over the last 12 years in the third quarter. And every single year, they've been able to massively increase their volume deliveries, and third quarter coming in at 435,000. Now, of course, the stock price is starting to recover a little bit. So 1.3% down. So we are seeing a lot of momentum back higher, back up to $246. This right here is the technical analysis, which we have broken down. So 240 is still going to be a very important level of support that we have talked about on the channel for Tesla. So this right here inside this circle, and that's going to be a confluence for this higher low and for this horizontal support as well. So this right here are two support levels to really watch for Tesla very closely. I actually did take a swing trade on one of the ticker symbols, one of the leverage ETFs. So again, if you want to get access to all those alerts, because I do believe there is a possibility for a potential dead cat bounce, for a potential upside here for individual stocks, considering how much they've been selling off. We've been talking about the technical oversold levels for the market, and for that reason, I do believe there is upside in the short term in the next few weeks for the markets, and that's exactly why I'm able to wanted to take a position from a swing trading perspective to play the upside for the markets. So again, link's gonna be down below if you want to get access to that. But $240, very important support. Now the interesting thing here is that in the short term, there is a possibility that Wall Street starts to kind of downplay this, delivery numbers and goes like, not only are we seeing margin compression, but we're also seeing a miss on expectations when it comes to deliveries. So it's possible that this delivery number leads to maybe some potential downgrades or some ratings that do get changed from an analyst perspective, because analysts get spooked, and that was not a small miss, right? That's a pretty wide miss here for the company, because if you come take a look at what the expectations were, so I don't know, there we go. Wall Street was expecting Tesla deliveries to be at 461,000 for the period ending in September 30th, and they delivered 435,000. That's a pretty big miss, right? 25,000 vehicles is not a small number, right? 25,000 is, if you take an average price of $54,000, that's $1.35 billion in revenue, right? $1.35 billion in revenue. And then if you basically take into account this number, and then multiply it by, let's say, 20%, that's $270 million, right? $270 million. And now that divided by the number of shares outstanding. So if you come down, the number of shares outstanding, we're looking at 3.17 billion. So if we do 3,170,000,000, that's going to be about 85 cents, maybe. Let's see here, 100,000 million. Okay, so one more. There we go. So 8 cents, right? Almost 9-cent effect that's going to have on this delivery miss on Wall Street expectations. So it's possible that Tesla does see maybe some downgrades or some ratings that get changed over this delivery miss. And that's one of the reasons why Tesla stock is down, but of course getting bought up very well right now, only down 1%. But it's going to have an 8 to 9 cent potential impact on earnings once the company reports for third quarter, which again is really where the focus is going to be, right? Because we've been kind of dealing with this whole overarching problem with Tesla lowering their prices, so price cuts, which are leading to lower margins, and this is all happening on the back of potentially higher demand, right? Because why else would Tesla be cutting their prices? Of course, commodity prices coming down, so they want their cars to be more affordable, but at the same time, you would expect if prices are coming down, deliveries are going higher, right? But because Tesla's factory shutdowns and downtime and whatnot, deliveries came in significantly lower than expectations. But I like to focus on the entire year, and I think 2022 numbers are still expected to be 2023 numbers are still expected to be 1.8 million, which is still going to be a very strong number on a year-over-year basis. So let me know your thoughts down in the comment section below. I do think that from a short-term perspective, there may be some potential headwind from Wall Street because of the 8 to 9 cent impact on earnings, but over the long term, this is just a small, miss. Like, it's really not even a miss in my book, because I don't like to compare the numbers from the analyst expectations. I like to look at it on a year-over-year basis, and year-over-year Tesla still massively grew in terms of deliveries. So hope you guys enjoyed this video. Let me know your thoughts down in the comment section below. Markets right now, pre-market, we are open, so QQQs are up over 0.5%, S&P is up flat. We got the Dow Jones basically down 22 basis points, and the government yields are continuing to move higher, 1.5%, up over 4.65% at the moment. So hope you guys enjoyed this video. Found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. As always, happy investing. I'll see you all in the next video.